The analysis of data or information can be broadly divided into two categories: quantitative analysis and qualitative analysis. Instead of reading out the definition of these two, first let us try to understand with an example. If a person is having fever, we measure the body temperature, right? So it could be 100 degree Fahrenheit or 102 degree Fahrenheit and so on. Once the person recovers, the temperature drops back to 98 or something around that. This is nothing but quantitative analysis. While measuring temperature is extremely important in case of illness, it does not give you any indication about the reason of illness. For that, a doctor will try to look for other symptoms like stomach pain, nausea, headache, or something else so that the exact reason of illness can be ascertained and proper treatment can be done. This is nothing but qualitative analysis. While both the analysis has its own importance in case of treatment of patients, the same concept applies to credit as well. And here we all are playing the role of credit doctor. Quantitative analysis in case of credit means classification or regrouping of financial data as per norms set by your bank. In simple words, when you are inserting data into Excel like this, in order to calculate all the ratios and eligibility of the borrower, you are just classifying or regrouping the financial information according to the norms set out by your bank. But analysis of balance sheet does not end there. Once the quantitative analysis is over, as credit officer, you are supposed to do qualitative analysis as well, which is nothing but writing comments or observation based on the figures you have arrived from your Excel. So now you have to go deep inside the financial indicators by studying the factors which causes the change. We have already covered net worth of a company in earlier lessons, and in case you have missed that, you must watch that tutorial once you finish this. The link is given in the description of the video. Now let's try to analyze and frame our remarks regarding the tangible net worth shown on your screen. Normally, what comments we are writing in the process note at the time of appraisal? The tangible net worth of the company is continuously increasing because of profit is added back. The estimated and the projected T&W is in tune with the past trends and therefore reasonable and acceptable. I am not saying this is incorrect, but the problem is this representation is done by considering the quantitative information only. This is nothing but translation of what numbers are indicating into descriptive language. There is no quality in the comment. This is just a superficial analysis. When figures in the tangible net worth row are enough to convey this information, is there any value addition by the comments we are writing? So let's try it once again. The tangible net worth is increasing continuously and is projected to increase further in future. As on 31/3/2018, the T&W has increased by 79.38% over the previous year. And as on 31/3/2019, it has further increased by 28.23% over the previous year. On subsequent years, it is projected to increase by 12.31% and 16.74%. Though there is a decrease in the percentage of T&W over previous years, in the estimated and projected T&W, the same is reasonable and is sufficient. No doubt, in this analysis, we have progressed one step further and calculated the percentage of increase or decrease in T&W as compared to previous year. This type of analysis is known as horizontal analysis. Though it throws some light on the variation of T&W movements, it is still a superficial analysis as this calculation is done on the face value of the indicator. This is not a decisive analysis as it does not give any critical information. There is no enhancement in the quality of comments on T&W. Still not good enough. One last time, please. If we express like this, the promoter's contribution remaining constant, the tangible net worth is increasing on account of profit that is retained in the system. But the quantum of profit is decreasing on YOY basis. In financial year 2019-20, it has decreased to 56.16 lakhs as compared to 100.44 lakhs in previous year. It is projected to decline further owing to present pandemic situation across the country. However, the company is able to maintain satisfactory NWC all through ensuring its margin contribution for the working capital facility. The ratios like current ratio and debt equity ratio also remains within the benchmark stipulated by the bank. In view of the same, we may conclude that the T&W maintained by the company is reasonably sufficient to maintain other parameters for working capital facility. Hence, we may accept the same. In the above analysis, the following are factored. The effect of underlying factors like promoters' capital and profitability which is affecting the T&W has been discussed. The declining trend observed in profitability compared to previous years and projected years has been discussed. But the responsibility of a credit officer does not end by identifying the issues or problems, because on a later date, if something goes wrong, the bank will ask, when you yourself identified the problem, why did you recommend? Hence, it is extremely important to write the mitigation steps as well. That is why we have also included the sufficiency of T&W to maintain other benchmark ratios required for working capital assessment. Finally, a concluding remark regarding the acceptability of the T&W. If you take a closer look at my comments, you can clearly see these four segments. It's not that when you are commenting upon any parameters, your eyes should get stuck to only one particular row of this Excel. Rather, you should know which other parameters can have an impact on this and which parameters can get impacted due to this. Finally, you try to establish a link or connection between all these parameters. In your discussion, you can also include factors such as industry condition, economic condition, change in management, वगैरह, which cannot be understood from numbers. Now let me clarify one thing. There is no end of perfection in credit analysis, especially the qualitative one. So I don't claim this one to be a perfect. The comments can vary from person to person and account to account. If you have any better suggestion, please feel free to write that in the comments. In case you find this interesting, let us know and we will try to cover qualitative analysis of some other parameters like ratios, sales or profit in future.